Hi! Welcome to this mini video introduction of trading psychology. My name is Celeste and I'm a trading psychology specialist. I have coached hundreds and thousands of traders in trading psychology. If it's your first time hearing about the terms trading psychology, or you might have heard about it before but you've never really had a deeper, more focused encounter with trading psychology, I don't blame you. It takes a level of advancement before a trader starts to really pay attention in trading psychology. This video is perfect for you. I recommend splitting this video into two different sessions. We are going to cover 4 topics: introduction to trading psychology, stages of maturation of a trader, habits and rituals that will optimize your performance, and finally, cognitive biases that might be impeding you on your way to success for profitable trading. I think you should go ahead and focus on the first half until the trader stages of maturation and come back the next day after you've digested it a little bit to finish the rest. However, if you feel like going on around and like binging the content, I won't stop you. But I want you to take your time and learn as much as you can, because this will be a very good addition to your skill set and to your progress as a trader. Trading is known to be a difficult field to succeed at. Depending on what you read, different studies mention as low as 1% and some would say 5% chance of being successful as a trader. Both numbers are still bleak. Now, why is that? Platforms like OctaFX makes it incredibly easy to open an account. They have great customer service and an interface that's easy to understand. In a matter of minutes, you and your friend can open an account and you will have the same access to the financial markets as the professionals do. You can buy and sell commodities and currencies. This makes people think that having an account makes them a trader. However, you can own a stethoscope, but that doesn't make you a doctor. It takes time and intentional effort, even years, to start thinking and to start acting like a trader. Let's begin. Trading psychology is the art and science of execution. Trading psychology is the bridge between knowledge and skill. Trading is a performance sport. It's just like basketball or rugby or golf or dancing or singing. I think you get what I mean. Even at the professional level, depending on the pressure or their mental game, professionals' performance can vary. Why is it so hard to buy low and sell high? Imagine this. Watching a ball game. Easy. You're watching from a third-person point of view, you're unattached, and you see things at a bird's eye view. Practicing your own shooting skills, a little trickier, but not an issue. No pressure, no problem. Playing with some of your friends may be a little harder, but think about it. What if it's the season's final? It's the last 2 minutes and the score is a tie, and the ball is in your hand. Trading psychology is concerned with the mind and the heart of the trader. It focuses on the one person who's making all the decisions. You, your belief system, whether or not you actually think you're worthy of becoming rich. Things that you do that might subconsciously self-sabotage your success, your habits, your routine. Why is revenge trading your typical trading sin, or maybe analysis paralysis? Trading psychology is strategy in action. It is concerned with making high conviction decisions at the face of uncertainty with very real financial consequences. There are 3 segments of trading. There's strategy, risk management, and trading psychology. Strategy is your plan of action, how you screen trades, when and why should you be entering a position. This is what newbies tend to focus on, and for good reason. Strategy is very individual to a person's lifestyle. How much time can they spend on the charts trading? Risk appetite too. There are people who are more comfortable making decisions with just charts and technical analysis, while there are people who are more into the fundamentals, like the news and valuations and all that stuff they see on TV or maybe Twitter. Whatever it is that your strategy is, just make sure that it has positive returns over time and that you have an edge. Risk management is a function of trading psychology, meaning your money management skills can be manipulated to make sure that you stay in control of your own emotional reactions. The more capital you risk, the higher your chances of tilting. Imagine this. You woke up having a hangover, or maybe just a bad night of insomnia. You only had 2-3 hours of sleep, and you have an early morning meeting or an appointment to go to. It doesn't matter how good you are at your job. And when you get there, you know for a fact that you will not be able to perform as well as you usually do. This is what trading psychology is concerned about. It directly impacts your performance because it cares about the trader who will actually execute the decisions you've cognitively made. Some of you might have experienced having a job or a day job, and there are days where you feel like you're just sailing through, and every issue they throw at you, you have a solution for. You're just 100% there. But there are also days where you're just 30% there, and showing up already took 10% of that. Your performance is highly dependent on your mental game, and trading psychology takes so much effort on making sure that you show up at your best. It's important to understand there are two types of trading psychology. There's individual psychology and there's market psychology. Market psychology is more focused on how the masses behave with money, greed, and fear, and how this is very contagious. It's more like behavioral finance. We're going to focus on individual psychology because between you and me, we both know that's where you can have more control on. Professional traders, firms, hedge funds, they do have a psychologist in-house or a performance coach ready to make sure that they will be under tip-top shape, mentally in there, ready to do their best and make the best financial decisions along with their team. As someone who's like a retail trader and you don't have that kind of support, we're going to try to supplement that by learning about trading psychology so you can be more accountable to your own actions. One of the things that can tremendously help a trader is by segmenting their growth so they know what to expect at each stage. You don't open an account on day one and expect to be making the profits of a professional trader who has been doing this for over a decade. We'll quickly cover the stages of a trader, a maturation process that I have created for my students and my clients so they can easily track their progress throughout the years and to lessen their frustration. But before we even discuss the stages, there is something called a trader's score, and this will determine how well they function on each stage. A trader going through grief or heartbreak can start acting like a beginner, making newbie mistakes because their core is not as strong. What's a trader's core? A trader's core is their belief system, their willpower strategy. How much self-compassion do they display when they inevitably make mistakes? Their rituals, their habits, how much support they get, the environment they have, and even their resources. A trader who has a rent to pay or hospital bill due in 5 days will take positions they normally would not. In video games, your core is kind of like your character stats, while stages is your character's level. Stage 1. Newbies experience unconscious incompetence. They aren't even aware of what they don't know. They don't even know what their emotional reactions are. Their rules are something they copy from other people. At this stage, it's important for newbies to feel safe enough to explore learning. Virtual trading is heavily advised. However, I do understand that some people need to inject a little money for the lessons to sink in. But no matter what you do not inject a large amount of capital. You must not traumatize your learning. Stage 1 traders typically do not have a lot of technical knowledge, and so as a stage 1 trader, you have 2 goals: survive, learn. Don't pressure yourself to earn just yet, just learn your way around. Stage 2 traders, on the other hand, are beginning to get the hang of it. They know they have much to learn. So for stage 2 traders, what's important is for you to be able to experiment. The rules you set for yourself are now beginning to reflect your lifestyle. This is a period of humility, and it can be the most tedious stage of all. It will take time and a lot of experimentation before a stage 2 trader can progress to stage 3, because then they will have to figure out what to focus on. Stage 3 is when a trader becomes an expert in a specific niche. Day trading, momentum trading, swing trading, contrarian approach, position trading, trend following. At this stage, he understands that the general market affects his individual trades, so he starts taking account of it. Finally, for stage 4 traders, these traders can trade on gut instinct. They've seen enough, experienced enough to have some kind of feeling of where the market is going. They can look at a chart and within seconds know if a trade is present. With stage 4 traders, they typically branch out to become experts of more niche. They start branching out to having more expertise than the one that they started when they were in stage 3. What's an important lesson to learn here is that in every stage, there is a different goal. From familiarizing yourself to finding your niche. What's important is you run your own race. Don't compare yourself to another person's success. There's no end goal in trading. The markets will continually evolve, so it will be foolish to act like you're on a race. So that's it for the first part of the video. You can continue on and enjoy the rest of it, but you can also stop now, review the lessons, let it sink in, and come back tomorrow for part 2.